Welcome to Smart Stock Watch. Today is May 15th, 2025, and we're diving into the first quarter financial results of ADC Therapeutics, a leader in the field of antibody-drug conjugates. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ADC Therapeutics has been making significant strides, especially with their flagship product, ZYNLONTA, and I'm excited to discuss their latest financial performance and operational updates.
Revenue and profitability overview. Let's start with the financials. ADC Therapeutics reported net product revenues of $17.4 million for Q1 2025, slightly down from last year. However, they saw a significant increase in license revenues. Can you elaborate on this, John?
Absolutely. The net product revenue from ZYNLONTA was slightly lower compared to the previous year, but the company recognized $5.6 million in license revenues and royalties, a substantial increase from $0.2 million last year. This was primarily due to a milestone payment from Health Canada for ZYNLONTA's approval.
And what about their profitability metrics?
Despite a net loss of $38.6 million, the adjusted EPS was better than expected at 22 cents, compared to the forecast of 38 cents. This improvement is largely due to higher license revenues and reduced operating expenses.
Operational efficiencies and future outlook. Moving on to operational efficiencies, ADC Therapeutics reported a decrease in selling and marketing expenses. What does this indicate about their operational strategy?
The decrease in selling and marketing expenses, down to $10.6 million, reflects their strategic cost-cutting measures, particularly in marketing and travel-related costs. This is a positive sign as it shows the company is optimizing its resources effectively.
And how does their cash position look?
They have a solid cash runway, with $194.7 million in cash and equivalents expected to fund operations into the second half of 2026. This provides them with a stable financial foundation to support ongoing and future clinical trials.
Clinical trials and strategic initiatives. Let's discuss their clinical trials. The LOTIS-7 trial has shown promising results. Can you tell us more about this?
Sure. The LOTIS-7 trial demonstrated an impressive overall response rate of 95.5% and a complete response rate of 90.9% for ZYNLONTA plus glofitamab. These results are very encouraging and position ZYNLONTA as a potential best-in-class treatment.
And what about their other trials and strategic decisions?
The LOTIS-5 trial is on track to reach its progression-free survival events by the end of 2025, which will be crucial for their confirmatory data. However, they have decided to discontinue the ADCT 602 trial due to clinical data, which allows them to focus resources on more promising areas.
Key takeaways. In summary, ADC Therapeutics has shown resilience with strong clinical trial results and improved financial metrics. Their strategic focus on ZYNLONTA and operational efficiencies are promising for future growth. John, any final thoughts?
ADC Therapeutics is well-positioned with a robust pipeline and a solid cash position. Investors should keep an eye on their upcoming clinical data releases, which could further enhance their market position.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ADC Therapeutics' performance in the comments below.